Hey, Anthony.
Hey, how you doing, Miss Flo?
I'm doing wonderful. This Mad Flow.
Miss Mad Flo?
Mad Flow is in the house. How
Come
you
on,
doing?
girl. Yes, you are. Yes, you
Tell us
are.
what's going on with you, Anthony, this afternoon.
Well, I tell you what. First of all, I just like to say hi to everybody that's out there. All right, this is Anthony Murray. I
You can make ice cream because you always freezing up.
finance. You have an issue financially dealing with your money, and you don't know where to put your money, so you stop losing it. You need to give me a call. All right, I can help you put your money somewhere where you won't ever have to worry about it for your retirement. So what's going on with me? Girl, there's a lot of stuff going on. A lot of stuff going on. I am watching um, uh, a harvest come in. You know, I'm like a financial farmer. I've been planting a lot of seeds out there, right? And now I'm starting to watch the harvest. The harvest is starting to come in. So
Okay.
I'm really excited about that, Flo. Really excited. I've been able to help a lot of people, and there's a lot more people out there that needs our help.
Hey, that is so true. You know what? This is Mad Flow, everybody. That's out there in Facebook and every other social media that we may be on. And y'all know my tagline. This is Mad Flow in the house. I'm not crazy, but I am mad about making a difference for life of others through financial literacy. And that is what we do here. And I want to ask you a question before we get started, because I'm going to do this every time we come on Fridays, just to
Uh-huh.
remind people, if today is your birthday and you turn 64, give you a little tip on something. There's something called a special enrollment for Medicare. So if you turn 64 this month, you have 7 months for special enrollment, which will be 3 months before
Your
your birthday
65th. Uh-huh.
and your birthday month, and 3 months after.
Right.
Okay. So if you turn 64 this month, just realize 3 months before your birthday come next year, you have to, 3 months before your birthday and your birthday month, 3 months after, that is your deadline for special enrollment. So you will not get what you call penalized. Now, if you turn 65 this month, guess what? Your time is just shortened. You lost the 3 months prior to your birthday.
That's right.
So
That's
you
right.
have this month, which is March, the rest of March, and you have the next 3 months if you turn 65 this month. The next 3 months, at the end of the third month, you have to make sure that you enroll for Medicare, because if you don't, you'll be penalized. So you don't want to get penalized. I'm just going to share that whenever we come on. And one other thing I want to share is this. We know in October that there is Breast Cancer Month. So every time we come on, every Friday, I'm just going to remind you ladies, and then there are some gents out there, make sure you do your what? Your monthly self-check, but
That's
also
right.
make sure it's your annual mammogram. So I want to make sure that I cover those two things every time we come on. So that's a great reminder for people. We have a great show. We're just going to have a discussion today. You guys be on the, I want you to be on if it is send the invites out, but guess what? Things are happening. And so we're in the real world. And Anthony and I is just going to have a discussion about what's happening with the banks within the last couple of weeks. You know, major.
Yeah. I mean, we talk about weeks, but even days, even the last couple of days, you know, major banks having issues. So if you have your money at a bank, you want to keep a close eye. Hey, look, not all the banks are. We're not saying the banks are going under. All right, but there's been a couple of banks, major banks, that have gone under within the last month. This month, actually, one is the third largest bank in Silicon Valley. That's California. Where a lot of the major tech corporations are headquartered. You know, so this is
a startup bank for a lot of technology companies. You know, so that's one of the major companies, major banks, that when companies are opening technology services, whatever, they use that bank. And Silicon Valley collapsed this month. Now, if you have money in any bank, I'm gonna let you know right now that your money is federally insured under FDIC, which stands for Federal Deposit Insurance Corporation, but only for $250,000.
That's it.
If you have more than $250,000 and the bank collapse or goes under, if you got $1 million in there, federal corporation is only going to cover $250,000. So remember that. But you know what's happening with the banks. I'm just going to read what I've been, seeing here, because I'm not a banker. Don't work in the bank. We tried to get someone to come on. Maybe next week we could, from the banking industry, to basically explain how the banking system works. We know that you put your money in the bank. They use your money to basically borrow against. So they'll give you a small interest, very small, 0.25% or less. They take your money and they use your money to borrow against, get bonds, and all of this stuff here. So we wanted someone from the banking industry to kind of give us more information on how the banking system actually works, but we weren't able to get someone in. But Silicon Valley banks collapse. Caution emerges over regional banks, because you know what happens sometimes? There's something that's called a monopoly. One fall, more are going to follow. And another bank has followed in pursuit, and that was the New York Signature Bank. So you think about that. Two large banks have collapsed within the last 2 weeks. People are probably running to the banks now trying to get the money out. I didn't run to my bank to try to get any of my money out. I don't have $250,000 in there.
Right.
A friend of mine called me and she says, I'm going to get my money out. But it happens. So you have to, realize and understand where you're keeping your money. Under the mattress still ain't good. If you keep
That's right.
Mattress,
That's right.
Hey,
Flo,
it's not going to grow. Yeah.
I want to read this article about the Silicon Valley Bank. And for those of you that are crypto folks, listen, you need to reach out to people. I'm just going to bank runs, crypto concerns and takeovers, a timeline of the panic. Silicon Valley Bank's collapse led to the failure of a second bank and prompted regulators to move to contain the fallout in the U.S. banking system. All right, let me keep reading. On March 10th, Silicon Valley Bank, one of the most prominent leaders in the startup ecosystem, collapsed. Federal regulators stepped in to allay fears and limit risk in the broader financial system. Here is a timeline of major events related to the bank's collapse and its aftermath. March 8th, Silvergate Capital, a cryptocurrency-focused bank, announced it would cease operations. Now, a lot of people are stuck in crypto, or they're cryptocurrency crazy, right? And what's going on with that? This is serious. So I'm starting. Silvergate Capital, a cryptocurrency-focused bank, announced it would cease operations and liquidate its assets after a bank run forced a California lender to sell a chunk of its debt securities. Now, this was March 8th, a couple of weeks or a week or so ago, right? Second thing, Silicon Valley Bank concerned investors when it said it needed to shore up its balance sheet and raise $2 billion in capital. It was forced to sell a bond portfolio at a $1.8 billion loss. In a letter to customers, Greg Becker, the chief executive of Silicon Valley Bank, said the bank enjoyed the financial position to weather sustained market pressures, but he noted that customer deposits had come in lower than forecast in February. Moody's, a credit ratings firm, downgraded the bank's bond rating and slashed its outlook to negative from stable. So, folks, this is serious stuff. Now, here again, no one is saying go to your bank and empty out the accounts. Nobody is saying that. All right. Your bank may not be in trouble at all. Matter of fact, Wells Fargo, Truist, and several other lending companies or banks, they jumped in to help out another bank that was having some serious trouble. So there was like eight banks that came together, or 7 or 8, I forget the exact number, and given several of them gave like $5 billion each, and then a couple of them gave like $2.5 billion, and several others gave $1 billion. This is serious stuff. All right, this is serious. A lot of people trust the bank, When there's so much, did you know the insurance industry is safer than the bank? That is true. Matter of fact, they warranty the policies on a higher dollar amount than banks. The FDIC insures your money in the bank. So I want to read this from March 9th. All right. It says, during a conference call, Mr. Becker urged venture capital firms to stay calm. Panic spread on social media among investors. Bill Ackman, the billionaire investor, suggested that Silicon Valley Bank could fail and need a bailout. And a note sent to clients, a Silicon Valley Bank executive wrote that the bank was actually quite sound, and it's disappointing to see so many smart investors tweet otherwise. Yeah, this is the bank that went under. All right. Silicon Valley Bank's announcement the day before prompted another wave of customer withdrawals, and its stock plummeted. All right, you ready for this? 60%. Read it yourself. Go to the internet. Take a look. March 10th. All right. So from the 8th to the 10th, events was happening. On March 10th, Silicon Valley Bank failed after a run on deposits. It reportedly worked with financial advisors until the morning to find a buyer. By midday, regulators took over Silicon Valley Bank. The nation's, are you ready? This bank is the nation's 16th largest bank. And the Federal Deposit, FDIC, was named the receiver. The failure of the 40-year-old institution became the largest bank crash since 2008.
40 years.
And it put nearly
retirement in that time period in that bank.
Sad, right? All right, now listen to this. It put nearly $175 billion in customer deposits under the regulator's control. Shock from Silicon Valley's woes reverberated through parts of the banking sector, and investors started to dump bank stocks, including those of First Republican Signature Bank, Western Alliance. Many of those institutions cater to niche clients. The nation's largest banks appeared insulated from the fallout. Hey, folks, this is serious stuff. This is Anthony Murray with Financial Sins. And hey, be sure your sins will find you out. Be sure your sins will find you out. Listen, I don't know everything that happened in that bank. Of course, they're not going to tell us everything. They're not going to put everything on the internet.
Yeah.
But whatever led up to it, that bank had issues. It had issues.
Listen to this, Anthony.
What
was probably a contributing factor? It says here, Silicon Valley Bank was a profitable bank ahead of its closure by California regulators, but it failed after the Federal Reserve's aggressive series of rate hikes hit the value of its bond portfolio. As its holdings lost value, SVB sold them at a loss. Now, think about this right here. There's regional banks' share of deposits that aren't covered by FDIC. So there's some banks that don't have, they have a large amount of clients that are not covered by FDIC. So Silicon Valley Bank had a high share of deposits that wasn't covered by FDIC insurance.
Oh, no.
Risk as its depositors were spooked and sought to withdraw funds. Scrutiny is now facing over regional banks. But look at this. The percent of deposits that are uninsured in different banks. Silicon Bank, 88%. 88% of their depositors are not insured. First Republic Bank, 68%.
Wow.
Comerica, 60%. Western Alliance Bancorp, 55%. Zions Bancorp, 53%. PacWest Bancorp, 53%. Regions Financial, 37%. But that's a large number.
Wow.
88% of deposits that are uninsured by FDIC. So billions of dollars. Depositors are losing billions of dollars.
Billions, not just a few dollars. We're talking about billions of dollars. Now, we think the 2008, 2007, 2009 era, we think that was a major disappointment when we see that financial institutions. Let me tell you something. During that period of time, I lost big money.
Same here.
I lost big money. I will never again put my money, and I put it was in some stock. Never again will I do that. Never again. All right. Now, I know not all stock is dangerous. I know that. But now that I'm in the financial industry and I know of products where I could put my money where I will never, ever lose a penny. When it becomes part of the principle, I never lose. I never lose. So I don't care about the if the economy bottoms up or anything like that. I'm just not going to lose any more money. All right. So, listen, if your money is in the bank, you better look at it and keep a very close eye. If you're involved in the cryptocurrency industry, you better pay close attention. Pay close attention. There's a lot of things going on that
and people really need to realize something. Okay, you had a bad experience with stocks. Other people probably had bad experience with stocks, but it's nothing against stocks. You have to do your research. But
That's
you
right.
also have to realize, diversify your portfolio. Don't keep your money, people, in one nest, one basket. You have to learn how to diversify, have more eggs in one basket. Don't do that. So learn to diversify. Get with a financial professional. If you don't understand your money or how to make your money work for you, get with someone who knows how to do that and how to guide you when it comes to your money. And that's what Anthony and I do. We help guide you, educate you. Like I said, I'm not crazy. I'm mad flow. I'm not crazy, but I'm just mad about making a difference of life of others through financial literacy. And that is one of the biggest keys, financial literacy. Get educated, stay on top of it, understand how money works, understand how you can make your money work hard for you. Because every day you go to work, 8 hours a day, 40 hours a week, getting paid, twice a month, twice a week, a weekly, monthly, however, but you get that paycheck, you don't know what to do with it. You just go out there and spend. You have to learn how to make that money work for you. Take some of that money, and there's something called pay yourself first.
Pay yourself first. That's right.
Pay yourself first. And if you get in the habit of making that like a bill, paying yourself first, putting your money in a good place is going to grow, good interest for you. Do it like a bill, because you pay that cable bill without a beat, without without thinking about it, you pay your cable bill.
That's right.
When it comes to paying yourself, we're lacking on that. We're lacking on it. So, and when you pay yourself, just like you get your income tax taken out of your paycheck, you don't see that money. You never saw that money, right? You don't miss it because you never saw it. So treat yourself, pay yourself the same way. Set it up on auto draft, where it's automatically taken out of your checking account, put into a good interest-bearing account. You don't see it, just let it grow. Just let it grow. Pay yourself first. Get in the habit of doing that.
Yeah, you know what, Flo? Where I messed up, I didn't diversify. All right.
Mhm.
I didn't diversify, but you know why I didn't diversify? I didn't know any better.
Mhm.
All right. I was not in the financial literacy industry. Not in 2008, 2009. I came into this industry back in 2018. All right, 2018. Now, folks, let me tell you something. Financial literacy is extremely valuable and extremely important for us today. We don't look at it like we should. We think that, well, 1 + 1 is 2. I don't use my checking account anymore. I use my debit card, so I don't need a check register, and we don't keep balance of things. I was talking with somebody, and guess what? They own a business. All of their money from the business goes into the bank. All of their money. All right. Now, what happens if a bank closes up and your money is there? See, I didn't diversify. I didn't diversify. All right. Banks are not bad. Now, this is one of the problems. When people start to panic, then there is a free fall. It's like a domino effect. Somebody get the wrong information and everyone starts panicking, or not everyone, but you know, a good portion of people, and they start taking their money out. And that's what happened to that bank. People started panicking and they took their money out. Maybe rightfully so. Now it's in the hands of FDIC. If they would distribute accordingly. But we saw that one of the main issues was the cryptocurrency. Hey, listen, folks, pay attention to what's going on out there. Pay attention to what's going on. We trust our jobs so much. Most people have 401k and nothing against that. All right. I have nothing against 401k. All right. But you need to be careful, even with 401k or 403b or 457, whatever you have, you still have to be careful. And this is why. You have to be careful because you don't know the future. You just don't know the future. All right. On top of that, someone asked me one day, they said, well, because they're looking at doing something, and they asked me a very serious question. They said, what's the tax rate going to be in 10 years? I said, I don't know. I don't know. So we discussed the current tax rate. And I said, well, currently it's such and such. And she said, wow. I said, so with inflation, I don't know where it's going to be. I don't know where the tax. Do you know that back during, I want to say it was during Reagan's years or during the Vietnam War, it had gone up as high as 94%. Now that's high. All right, so imagine.
That's scary. That's scary.
That's scary. Now imagine you have your money in a 401k, 403b, you have the tax rate, but you never looked at the fee that company that's managing your 401k, you never looked at their fee. So right now the tax rate is around 27 and a half, something like that. All right. So whatever your fee is, I don't know what your fee is, but let's say the fee is moderate. You have a good fee. Let's say the fee for your 401k is only 16 or 15. Let's say 15%. 15% plus let's say 20, let's say 25 instead of 27. That's 40% of every $100 you're going to lose. It's going to go to fee and taxes. So $40 out of 100, oh, that's a pretty good chunk of change. Hey, Flo, I was talking with somebody one day, and I asked them, I said, well, you have a 401k? They said, yeah, they work over at Gulfstream. I said, well, how much money are you going to lose when you take that money out? He said, oh, around 35%, like it was nothing. I said, wait a minute. I said, let me put this in perspective. You mean to tell me that for every $100, you're going to lose $35? He started rubbing his chin. He started thinking about it then. Then he said, well, what do you have? All right. What's going on right now? And we don't know how far this thing's going to go with the banks. We don't know how far. All right. Now, I want to read on March 12th what the regulators said. To prevent the spread of banking contagion, regulators seized Signature Bank. The one in New York is Signature Bank. The one in New York, all right, to some extent, the bank, which had 40 branches, was a victim of the panic surrounding Silicon Valley Bank.
Wow.
All right. So I don't know how many other banks are tied into Silicon. All right. And unfortunately, you know what we do as people? We say, oh, well, that was on the West Coast. Oh, that was up north. All right, think about it. Think about it. New York and California are around 3,000 miles apart. And yet, that would happen to the Silicon Bank affected what happened to the bank in New York. Where's your money? Where is you better look at your money. You better recognize that something's going on in our economy, and you better start playing the safe game. Put your money somewhere where you can earn money and not lose money, and your money be protected. Mm-hmm. Hey, Flo, you know what? One, and I'm not going to say the name of this company, but what they're telling people, because I know somebody who have their money invested through this firm, and they're losing lots of money. And they're telling people, well, we can put your money in a money market. It'll be safe there. Mm. All right. But how much money, how much interest are money markets earning right now? If it's earning less than 4%, you're actually losing. You're still losing money.
So we got to let the people know when we talk about diversified, not putting your money in one basket. You have to understand, research, get with professional advisor or professional financial professional. Diversifying means having more than just a savings account. You have to understand IRAs. Get yourself an annuity. If you have 401k, keep your 401k. It's just that when you retire or leave that business, don't leave that 401k there.
Don't leave that money there.
Move that money somewhere else where you have control. As long as you leave that money in the company that you left or retired from, they have control.
Right.
So I'm not putting in control of you where you understand this. So understand, if your company offers a 457 plan, participate in it. If it offers a 401k, participate in it. Understand how stocks, if you want to get stocks, mutual funds, bonds, you just have to research, understand how these products work, and then you can invest in them, but you have to do your homework. You have to do your work. You have to get educated. Understand. I'm gonna tell you something. Don't do like I did when I retired from Chatham County Police Department, 25 years. When I retired, my 401k accumulated to over 150 something thousand. During the
Wow.
time that I had that 401k, I lost during the years, I probably lost something like 80 something thousand. But I ended up with 150,000 when I retired. Never touched that money. I said, you know what? I don't need that money because I'm still got my retirement coming in, got some other investments coming in, had income coming in, never used it, never touched it for maybe about 4 years, 4 or 5 years, never touched it. Then I touched it one time. Of course, I wasn't old enough, so I was penalized. But it was so easy to touch it, I touched it again. And I touched
Oh,
it again. And before you know it, that 150 is gone. So don't make the same mistake that I did when I retired with my 457, didn't know what to do with it. But I'm telling you what, now that I am financially educated, I understand how money works. I wish that I had talked to someone in the financial industry that could educate me about what I could do with that money. Because I could have taken that 150,000, roll it over to an IRA, roll it over to an annuity, let it sit in that annuity for the next 15 years because I retired young. So I'm at retirement age now. So next year will be like a full retirement year for me. From 2007, when I retired, to next year, that money could have been sitting, that 150,000 could have been sitting, growing. And I'm estimating that if I had did it, I could possibly have about 600,000 now. I did not know. The less you know, the more it hurts you. The more it hurts your pocket. The less you know about money and how money works, the more it's going to hurt you. And the less you know about money and understand money, you know who takes advantage of you? Those who have that knowledge, they will take advantage of someone who has no knowledge, a poor person who has no financial knowledge. You know, the average worker that has no financial knowledge. People will take advantage of your ignorance, I'm telling you, and they will prosper off of your ignorance. So we're just saying this: diversify. Don't keep your money in one basket. If you got your money in a bank, no matter what bank it is, you need to realize why would you have $20,000 or $50,000 sitting in a bank that's not working for you? That money is not working for you. And we also offer financial workshop classes. I'm gonna put that workshop link up. We offer these classes free of charge. There's no charge to come to our classes. They're all virtual, convenient for you, 2 p.m., 8 p.m., 10 p.m., Monday through Friday, except on Wednesday, it's just at 2 p.m. So I'm going to you're going to see the ticker up there with the address. Take that address, use it, register for the workshop classes, and learn. Okay? Learn.
hey, and if you're in the Effingham area, I have financial literacy workshops every Monday at noon. Financial literacy free, either online or in person. Feel free to give me a call. My number's running on the bottom, and we'll be more than happy to work with you. Let me tell you, this is very serious, people. This is very. I want to read something about from March 16th. So today is the 17th. This is from yesterday. First Republic Bank received $30 billion in deposits from nearly a dozen of the United States' biggest banks, including JP Morgan Chase, Wells Fargo, and Morgan Stanley, just to name a few. The bank shares closed up 10%. All right, so that helped them to help them to boost their shares back. And this is a very serious time we're living in. You know, we're living. I call it the last days. Now I don't know what you call it, but I'm a pastor, man. You know, and this is what is this is serious stuff. You have to know what's going on in the finance industry. You know, a lot of people just take it for granted. Well, my money is fine. You know, I've been working at this place for so many years. What about the people that were working at that bank for 20 years, 30 years, 15 years? And then all of a sudden, that bank's doors are shut. They're closed.
It's about the depositors that's been depositing their, you know, their retirement.
Maybe since they opened. Yeah.
40 years. You work 40 years. You work 30 years, 40 years. And all of a sudden you wake up one morning and you see the news and your money's gone. So there it is, worldsystembuilder.com/WS US. That's our financial education workshops. Monday through Friday.
So, you know, they're recognizing this bank as one of the most prominent lenders in the world of technology startup, and it collapsed on March 10th. So, hey, don't be quick to jump on all this new electronic technology stuff. You know, I've been invited many times to jump on the bandwagon for cryptocurrency. I actually bought some. Matter of fact, I still have it. But
I don't even understand how it works.
Look, I don't understand either. But you know what I did? I bought $10 worth. And I'm just watching it climb. I'm just watching, you know, it goes up, it comes down, it goes up, it comes down. I have a friend, though, who he has cryptocurrency, and I don't know where his is standing right now. But last year, it was as high as $500,000. Now, with this recent fall of some of these banks, I don't know. I don't know where his crypto is now. I do know this, that it pays to pay attention to what's going on in the financial industry. If we ought to learn anything, we surely ought to learn how money works. It's simple, but yet there's so many different parts to it. You know, the financial industry is, as you can see, one of the richest industries in the world. One of the richest industries in the world. So what do you know about your money? How? What you say? What you say, Flo?
I say 68 trillion moving.
Wow.
That is the financial industry.
Wow.
If you want to learn anything, learn the financial industry more than anything else. When you learn the financial industry, learn about your money.
That's right. That's right. That's right. This ought to be a wake-up call. It really ought to be a wake-up call. All right. Now, Flo, can you put this up for me?
Say it.
Maybe I could do it. I could do it. Or for Monday at noon, if they want to contact me, they can contact me. Or if they want to participate in the workshops. Now we have 6, or is it 7 now? 7 workshops now. We have 7.
What's the 7th
one? They broke up one of them into 2.
Oh, okay.
All right. And all we do is rotate those workshops. That's all. Just keep giving the same workshops over and over and over and over and over. All right. And then one of the workshops will actually help you to get into the finance industry if you're interested in getting into the finance industry. Now, as far as instruction, our workshops are free, absolutely free. And if you say, hey, look, I want to get my license to do this, you can do that. You can do that. Matter of fact, I'm going to give you some information. All right, and I'm hoping that you take the advantage of it. All right, because it will help you out tremendously.
What's the address of Rankin?
272 South Columbia Avenue, Rankin, Georgia, 31326.
And y'all do this every Monday?
Every Monday. Every Monday. I'm doing this every Monday at 12 o'clock. I'm doing it live so people could actually come to the office. There's a workbook and a textbook. I sell those $5 each, so $10 for the pair. You know, if you go to college, you know how much a workbook and a textbook, just a textbook. Man, when I was in school, I bought almost all those books used. Every book I could get used, I bought used because knew they were $100. They were, and that was way back. That was way back, you know. And even when I was going to Bible college, the textbooks were they're expensive, you know. So, and I still have. I keep all those books. I use them as reference material now. All right, I use them as reference material. So. This is critical. You want to find out everything you can about your money. You work hard for that stuff.
That stuff, that money. Yeah, you work hard for that stuff.
How painful it is. How painful it is to retire and then have to go back and find another full-time job because you don't have enough money.
Oh, yeah.
To support your retirement. Well, I tell you what, you are not by yourself. There's a lot of people, so there's nothing to be embarrassed about. You just got to pick up the pieces and keep moving forward. That's what you have to do. Don't you dare beat up yourself. Don't talk down to yourself. You just pick up the pieces and you keep moving forward.
Keep it moving.
Yep, keep it moving.
I'm at 12.
Let me see if I have it back here. The thing about doing live, y'all, you can't edit it. It's live. It is live.
Monday's at 12 noon.
Monday's at 12, yeah.
Give them a list of the workshops that we offer.
Oh, man. Financial planning, retirement. Hey, what about education? I'm doing one on HIFE now. I'm doing one on HIFE. Heartland Institute Financial. And listen, I'm telling you, financial education. This is phenomenal. Why? Because HIFE, or Heartland Institute of Financial Education, deals with if you have children, say from 8th grade up, and they're really serious about college or a trade or whatever, Heartland will help them plan, because it's good to have a college career goal in mind, but what about a plan?
They get a coach. You can't beat that, having a coach to basically work with your child.
There you go.
You know, continuously work their child from 8th grade to 12th grade. And the great thing about that, you think about our high schools now with the counselor, college counselors in high schools. You know, 4 years, in 4 years, your child may have met with a counselor in reference to their college education 45 minutes in 4 years.
Right.
45 minutes. Because if you're in a school system and there's 4,000 children in that one school system, do you think that counselor has enough quality time to spend with those students that starts in the 8th grade to 12th grade to really give them guidance for the college? No, it is not going to happen. When you hire a coach, basically, we are consultants with the Heartland Institute for Financial Education. We're consultants, but we help match your child and the parent up with a coach through HIFE. And that coach main purpose is to work with your child and that parent to get them on track. You know, FIFA, you know how long FIFA is? All that paperwork they have to fill out. The coach helps with that. You know, when it comes to getting financial aid, financial money, whether it be, what do you call them, scholarships or financial aid, whatever, the coach is going to help your child find financial aid for college.
Right.
The coach is going to help your child determine what their major is, so they won't go to college the first year and realize this is not what I want to do. They wasted a year, a whole year that you paid for, and now they're going to extend their time for another 4 years. Instead of, graduating in 4 years, they graduate in 5 years. A coach going to have your child so guided in the right direction, they'll know exactly what they want to go to college for, and that first year is not going to be a wasted year. That first year is going to be a year that they use towards their 3 more years to go for college.
Yeah, because you know what? The average college student now is not in college. If they're going to get a bachelor's, you know what the average period of time is now? 6 years. 6 years. Why? Because they change their major. They change their major several times. You know, I know when I was in college, I changed my major one time, but the one time I changed it was because the major that I had was only a 1-year program. This is when data processing first came out, or they was making it available at this particular school anyway. It was a 1-year program, and then after that, I extended it and changed majors to something else. Well, listen, folks, our time is almost at the end. Almost at the end. I want you guys to reach out to us. Hey, Flo, put your name and number up there. Oh, let me put all of our names and number up there. All right, because if you want to reach out to us, you can. You can reach out. You can reach out to Flo. You can reach out to me. 2 of our partners not here today. You can reach out to Tanya. You can reach out to Renetta. All right. Guess what we're here for? We're here to help. We are here to help. We're here to make it work for you. Right? We're here to make it work for you. So I want you to do something. Go on Facebook. And when you go on Facebook, they'll pull up Financial Sense or All Things Relevant Media on Facebook. All Things Relevant Media on Facebook. and tell all your friends to do the same thing. And then tell them to press that like button maybe 20 times each. Every time they get excited, hit that like button. Like. Hit that like button. Why? Because the more people like this, the more we can get this word out, the more people we can help. And that's really what it's all about. That's really what it's all about. Now, while you're protecting your money and you're looking at your money, don't forget wills and trusts. Very critical. You don't want to protect all your money, and then when you go and pass on in life, all of a sudden people fighting over your money that you left for your property or whatever, right? You want to make sure you have a good safety net in place, and that's where a trust comes in, or a will. I would do a trust over a will, all right? But for those of you that cannot afford a trust, get a will. They don't cost that much anymore. Matter of fact, if you contact me or Flo, we can probably help you find one free or close to free. So give us a call. Our numbers are running on the bottom. My name is Anthony Murray, and I want to take this time to say thank you for being with us today. And I hope you got something out of this. You know, I hope we stirred up some interest, some questions about our banking system, about our economy, what's going on, so that you would take a closer look at it. Now, don't get in a panic. Just investigate. And please do like Flo said earlier. She gave us some really good, wise, sound advice. Diversify your money. Don't put all your eggs in one basket. That was my mother used to tell me. Don't put all your eggs in one basket.
That is so true.
All right, Flo, why don't you close this out?
Well, guys, it was a pleasure having you with us today. This was just a conversation with me and Anthony in reference to what's happening, presently with our bank. Y'all take care of your money now. Get this education, learn it. This is Mad Flo. I'm not crazy, but I am mad about making a difference for the life of others. And this is Our Black Media, all things relevant. So we look forward to seeing you again next Friday, same time, 1 p.m. And again, like, share. So we'll see y'all next week, same time, 1 p.m. on time. Y'all have a great day. And happy St. Patrick's Day. We got the right colors today, don't we?
Yeah, yeah, I think so.
Money is always green. All right, we're going to close it out, you guys. Thank y'all for joining us.
We'll see you next time.
Like this.